Two people buy life insurance the same week. One pays $40 a month, the other pays $400. Same age, same health. So, what is the other person actually paying for? Life insurance comes in two basic shapes, and the difference confuses almost everyone. Term life covers you for a set number of years, say 10, 20, or 30. Whole life covers you for your entire life and builds a small savings balance called cash value. One is cheaper and temporary. The other is pricier and permanent. Most overpaying comes from not knowing which problem you're actually trying to solve. Start with term, the simpler one. You pick a length and a payout, say $500,000. If you pass away during that term, your beneficiaries get the money. If you outlive the term, the coverage ends, and nobody gets a check. That sounds like a downside, but it's why term is cheap. A healthy person in their 30s can cover $500,000 for the price of a few coffees a week. The idea is to carry it during the years people depend on your income, then let it expire once those needs are gone. Whole life works differently. It never expires, and part of every premium goes into a cash value account, which grows slowly. You can borrow against it later. That permanence and savings is why whole life can cost 5 to 15 times more than term. Supporters like that, the coverage is locked in for life, and the cash value is predictable. Critics point out that the growth is usually modest, the fees can be high, and it takes years before the cash value amounts to much. Whether it's worth it depends on your goals, not on which sounds better in an ad. Here's the part that usually settles it. The real question isn't term versus whole life, it's how long you'll need coverage. The financial risk is concentrated in a stretch of years, the decades when others rely on your paycheck. Once the mortgage is paid and the kids are grown, that risk often shrinks. A common framing is buy term and invest the difference. Cover the risky years cheaply and put the savings elsewhere. Whole life tends to appeal to people with lifelong dependents, estate planning needs, or specific tax situations. Neither is universally right. It depends on your timeline, your budget, and what you're protecting. So which one wins? Neither. And that's the point. Term and whole life solve different problems. The winner is whichever one matches how long you need protection and what you can afford. The mismatch is what costs people. If this made the choice clearer, subscribe. We break down one insurance question every week. Tell us in the comments. Term, whole life, or still not sure?